Assalamualaikum and very good morning. Okay, let's continue with the second part of the topic of financial crisis in advanced economies. Okay, we have discussed about why banking crisis occurred in 1980s and the Asian financial crisis occurs in 1997. Now we move to the global crisis which is occur in 2007. Okay, Okay, we know that the financial crisis are major disruptions in financial market characterized by sharp decline in asset price and firms failure. Okay, beginning in August 2007, the US entered into a crisis that was described as once in a century credit tsunami. Okay, this description is done by a former US Federal Reserve Chairman Alan Greenspan has admitted that he was blindsided by the once in a century credit tsunami that was wreaked havoc on the world economies. Given the financial damage to date, he cannot see how they can avoid a significant rise of layoffs and unemployment that will also harm the world's economy, including Malaysia. Okay, because of Malaysia is uh, depending on the US as a big or the main country of contributions to the world's economics. Okay, the financial crisis of 2008, 2007, 2008, also known as the global financial crisis, was a severe worldwide financial crisis. Excessive risk-taking by banks combined with the bursting of the United States housing bubble caused the value of the security tied to US real estate to plummet, damaging financial institutions globally, culminating with the bankruptcy of Lehman Brothers on September 15, 2008 and international banking crisis. So because of this crisis occurred in US, so it spread to the other countries including Malaysia. Okay, the crisis sparked the Great Recession, which at the time was the most severe global recession since the Great Depression. It was also followed by the European debt crisis, which began with a deficit in Greece in late 2009 and the 2008 to 2011 Icelandic financial crisis, which involved the bank failure of all three of the major banks in Iceland and uh, relative to the size of its economy, was the largest economic collapse suffered by any country in economic history, including Malaysia until today. Okay, so what are the main causes of the global financial crisis? The first one is excessive risk-taking in a favorable macroeconomic environment, increased borrowings by bank and investor, and regulations and policy error. Okay, and then how the global financial crisis unfold. Okay, US house price fell, borrowers miss repayment. Okay, miss repayment means it creating the NPL, non-performing loan. So it will harm the banking sector in US. Stress in the financial systems spill over to other countries. Okay, failure of the financial firms, panic and creating a panic in financial market. Okay, so what are the policy responses? Okay, by the government to overcome the problems. Okay, the first one is lower interest rate to increase the loan to stimulate the economic activity. Okay, the second one is increase government spending. Government increase their spending to stimulate demand and support employment throughout the economy. And the third one, stronger oversight of financial system, which is regulators strengthen the oversight of banks and other financial institutions. Among many new global regulations, banks must now assess more closely the risk of the loans they are providing and use more resilient funding resources. That's why they use the RMA that we discussed in the first part. Okay, At 2007-2009 financial crisis, by examining three central factors: financial innovations in mortgage market, agency problem in mortgage market, and the role of asymmetric information in the credit rating process. Okay, financial innovations in mortgage market develops along a few lines. The first one is less than credit worthy. Okay, borrowers found the ability to purchase home through subprime lending and practice almost non-existent until the 2000s. Financial engineering developed new financial products to further enhance and distribute risk from mortgage lending. So it will aggravate asymmetric information. Okay, and then agency problems in mortgage markets are also reached new level. Mortgage originator did not hold the actual mortgage but sold the notes in the secondary market. Mortgage originator earns fee from the volumes of loan produced, not the quality, and then it will create the moral hazard problems. In the extreme, unqualified borrower bought house they could not afford through either creative mortgage products or outright frauds, such as inflated income. So it will create the adverse selection. Okay. Finally, the rating agencies made asymmetry become more work. Agencies consulted with firms on structuring products to achieve the higher rating, creating a clear conflict. It also aggravates asymmetric information. Further, the rating system was hardly designed to address the complex nature of the structured debt design. The result was meaningless ratings, and the investor had relied on to assess the quality of their investment. Okay. Now let's move to the dynamic of financial crisis in advanced economies. So this figure actually you can find from your module. Okay. At the first stage, we can see the initiations of financial crisis, which is the deteriorations in financial institution balance sheet occurs in this stage, and then the asset price decline, increase in interest rate, and increase in uncertainty. So these four factors contribute to the worsen of the adverse selection and moral hazard problems. So because of these problems, it will create the economic activity decline. So when at the stage 2, we can see this stage the banking crisis occurs. Okay, when the economic activity declines, so the bank system will collapse. So it's creating the banking crisis. And when the banking crisis occurs, it will worsen more the adverse selections and moral hazard problem in the banking system. And it will create more economic activity decline. And hence, when it goes to the stage 3, so the debt inflation will occur, which is the unanticipated decline in price level occurs, and then the adverse selection and the moral hazard problem getting more worse, and lastly, it will create the economic activity decline. Okay, so that is the steps of the dynamics of financial crisis in advanced economics. So what happened to the dynamic of financial crisis in emerging market economies? Emerging market economies means it's a market that has some characteristics of a developed market but does not fully meet its standards. Okay, this includes markets that may become developed markets in further or way in the past. Okay, the dynamic of the financial crisis in emerging market economies have many of the same elements as those found in advanced countries like United States. However, there are some important differences. Okay, we can see from these figures. Also, you can find from your module. Okay, at the first stage, initial financial crisis seems like what happened in the dynamic financial crisis in advanced economies, but at this stage, the fiscal imbalance occurs. Okay, the fiscal imbalance occurs, it will disturb the deteriorations in financial institution balance sheet. Okay, so it will go the same problems, creating the worsened adverse selection and moral hazard. And then at this stage 2, okay, there is a currency crisis, which is because of these 4 elements. Okay, it will disturb the foreign exchange. So it will create the foreign exchange crisis, and then it will worsen the adverse selections and moral hazard. Okay, when it comes to the stage 3, the full-fledged of financial crisis. And then because of the worsen of the adverse selections and moral hazard problem, so it will create the economic activities and then creating the banking crisis. And then when the banking crisis occurs, meaning the banking systems collapse, so the adverse selections and moral hazard problem getting worse, and it create the economic activity decline in the economies. Okay, so now look at the cause of banking crisis in other countries. You can see here in Malaysia, starting 1997, which is the Asian financial crisis ongoing until today. So Malaysia have to spend on 16% of the GDP to rescue the banking system. Okay, banking system. And you can see from other country also needs to spend sums of the GDPs, okay, to rescue the banking sector. Because of when the banking system collapse, it will create the banking crisis, and lastly will create the financial crisis or the declinings of the economy. Okay, and then so the last but not least, so this map show the banking crisis worldwide. So Malaysia is one of the country which is affected by the financial crisis. Okay, during 1980s, 1997, and 2007 until today. Okay, so that's all for this topic. Hope you understand, and we will meet again in the next topic soon. Assalamualaikum and good afternoon.